Cathie Wood just totally sold out of some stocks that you're still holding.
This is fine.
If that makes you feel like this, then don't worry, I'm right there with you. I don't typically make episodes about Cathie Wood selling out of stocks because when she does, it can be for a wide variety of reasons, not all of which are bad. However, with earnings reports currently sending some stocks to the moon while cutting others in half, I figured it would be useful to talk about the different kinds of sales that Cathie Wood has been making right now. My goal is to offer a little bit of insight into why she might be selling out of some stocks but not others, and tell you what I'm doing as a result since I hold a lot of them. The stocks that I'll be talking about are Nvidia, Pinterest, Peloton, and Zillow in that order. Your time is valuable, so timestamps are enabled for your convenience. Let's dive right into it, starting with some of the basics. One of the things you should know about Cathie Wood's 6 actively managed funds is that they're not allowed to hold a lot of cash. That makes sense because people are paying ARK Invest to manage their money, so they don't want to see a large chunk of that money staying on the sidelines. The ARK funds are fully invested, meaning they typically have around 0.5% in cash, if not even less. So what does Cathie Wood do instead of holding cash? Well, each fund has a couple of cash-like positions. Here's what that means exactly.
So Apple was one of our cash-like instruments. It's an innovative company in the innovation zone, but its characteristics are very defensive. So we will add names like Apple, the FANGs, Apple, Google, Facebook. We will add to those positions or even reintroduce those stocks. And we just wanted to have very liquid stocks. Apple is a great company. It's going to do fine. But we will use the existing FANGs. If you see, they are acting very defensively. Become a defensive group. So we will fold them in, increase them when we see a move like we saw last year. When we see a decline, like the one we're seeing now, we're seeing much higher returns from the other stocks in our portfolio.
So she's holding a few big, relatively stable tech giants in her portfolios that she treats like cash. Let me point out 2 things here. First, Cathie Wood has almost tripled the amount of shares she holds in Facebook, now Meta, over the last few trading days. I do think that Meta is still largely a cash-like position for ARK Invest, but maybe they're also happier holding more of it since the metaverse is a theme that ARK Invest actively researches and invests in. Okay, but Facebook isn't the company that I want to talk about. Nvidia is, ticker symbol NVDA. Nvidia is a great company that's got its hands in basically every type of artificial intelligence application ever. They're hugely disruptive in terms of both software and hardware, and they're a long-term winner in a hard-to-win market. And ARK Invest is constantly talking about their innovations and their beneficiaries. Oh yeah, and Cathie Wood basically sold out of Nvidia at the end of October, and since then the stock has rallied over 30%. What gives? Well, the answer is probably that Nvidia is a cash-like position to ARK Invest, just like Apple and Meta. It's a big stock. Cathie Wood has actually been lowering her overall position in Nvidia since late July or early August, right around when Robinhood IPO'd and Cathie Wood was buying into Ginkgo Bioworks as well. I obviously can't know for sure, but it seems reasonable that selling Nvidia is part of how she got the money to load up on those 2 stocks. My point is, just because Cathie Wood sold out of Nvidia doesn't make Nvidia a bad stock or Cathie Wood a bad investor. There's just more to the story than that, and knowing that might give you a leg up on other investors that act only based on headlines. As a result, I still plan on putting Nvidia in my $100,000 portfolio much sooner than later, even after its recent rally. Speaking of getting a leg up on others, let's talk about Pinterest because, well, ARK Invest doesn't talk about Pinterest all that often. If you go to ark-invest.com, which is where they share all of their research, and you click on articles, you can then filter their research by company. If you type in PINS, you get a single article from late last year about Microsoft potentially buying TikTok. If you search for Pinterest in this article, it's only mentioned once in the following sentence. Compared to some more traditional social media platforms like Instagram, Snapchat, and Pinterest, TikTok's competitive advantage appears clear: artificial intelligence. Whenever ARK Invest mentions Pinterest in their newsletter or emails, which only happens once or twice, it's always in this context of traditional social media. This is actually the stock that I disagree with ARK Invest the most on, because people don't go to Pinterest to keep up to date with or chat with their friends. They go to Pinterest to plan projects and future purchases. This isn't about catching up on what has happened, it's about planning what is yet to happen, which makes Pinterest's unique data set extremely valuable. If you want to know my full investment thesis on Pinterest, I made an episode that dives deep into all of the innovative things they do. I'll leave a link to that episode in the top right-hand corner of your screen right now and in the description below as well. In my opinion, this is a very rare case where ARK Invest may not have the right long-term thesis on a stock, so they may have sold out of it for something that they have way more conviction in. In mid-October, ARK Invest had about $100 million of Pinterest stock, so I do think that they really saw something in it. Then they sold out of it when the PayPal acquisition rumors jumped the stock price up by over 20%. I'm not a financial advisor, and this is not financial advice, but I do think that Pinterest will be worth way more than even $70 per share, which is what the rumors said that PayPal wanted to acquire them for. So I'm still holding on to my current shares of Pinterest and might even buy a few more shares as the stock keeps sliding. Next up, we have Peloton. Oh boy. These are the kinds of moves that make me think that Cathie Wood has psychic powers. On October 26th, ARK Invest had 1.7 million shares of Peloton, totaling just under $160 million. On November 1st, they had just 11,000 shares, or roughly $1 million in Peloton. And on November 4th, Peloton reported earnings, which, all kidding aside, here's a quick clip from Cathie Wood's most recent episode of In the Know, where she talks about Peloton and why she sold it.
Peloton news this week, today or yesterday, about a big miss is feeding this stay at home is done, get out of those stocks, they're too highly valued. We think that Peloton is an exception to the others like Zoom and Teladoc, for example. Peloton was really a stay-at-home company, a purchase. I wouldn't take what's going on in the market to suggest that the stay-at-home stocks are done. We don't think so. We think they've changed the way we work, the way we live, education, medicine, and so forth.
This is actually a really deep insight that took a while to sink in for me. Just like there's an important difference between which Chinese tech companies that their government supports and which ones are facing extra regulatory crackdowns, there's an important difference between companies that are helping an industry go digital and a true stay-at-home stock. According to Cathie Wood, the Zooms and the Teladocs of the world are genuinely transforming our lives, and all the pandemic did for them was speed up their adoption by forcing people to try them years before they may have otherwise. Compare that to a company like Peloton, which brings something physical into the home instead of you going to where that thing normally is, in this case, exercise equipment in a gym. They're still pretty reliant on selling an expensive piece of home workout equipment up front, which is to their detriment when people are trying to spend less time at home. To their credit, though, Peloton's connected subscriptions are getting closer and closer to accounting for about half of their revenue, which should greatly increase their margins in the future. Still, this is where I made my mistake. I initially put Peloton in the same bucket as Roku, another physical device that you get for your home to consume digital media. But Roku doesn't really have that same upfront cost like Peloton, and its revenue model is all ads-based, not subscription-based. The real secret sauce of Roku is how it uses artificial intelligence to match audiences, ads, and content. Very different from Peloton's differentiated products. So here's an example where ARK Invest had the right idea, and I didn't until it was too late. This is where my investing behavior appears to have paid off. I wasn't too sure about Peloton when I put it in my portfolio, and as a result, I only had 5 shares of it, since I'm averaging in my $100,000 over a few months. If I had spent my entire allocation on Peloton all at once, I'd be a lot saltier about my position right now. But as of now, I'm out about $150 on Peloton, so all I'm doing about it is nothing. I'm keeping my shares, keeping up to date on the news, but otherwise focusing my attention on other stocks for now. And finally, there's Zillow. At the start of November, Cathie Wood had over $1 billion in Zillow. It was ARK Invest's 11th biggest position overall out of more than 150 positions, right behind Zoom. Absolutely massive. Since then, Cathie Wood has sold over half of her shares as the stock also dropped about 25% in price. Today, just 1 week later, it's ARK Invest's 33rd biggest position overall at around $330 million, but she's not out completely. Why not? Well, one of my favorite things about following Cathie Wood is that she usually just comes right out and tells us.
So iBuying, so that's when online brokers, real estate brokers, are willing to buy a home from someone who wants to sell, renovate it, and flip it quickly, and take friction out of the home selling and buying process. Well, one of the major iBuyers out there this week basically pulled out of that market and said, this is an unstable situation. We're losing money. We're not going to bet the company on it. And I thought, wow, okay, that suggests something's changing in the housing market. And we're also seeing a lot of pre-market buying. This home, a real estate agent says, well, this home is not on the market, but I think I can get the owner to sell it at this price. We're seeing a lot of that here in St. Petersburg, Florida, and I think that's happening around the country. So I'm wondering if even the housing market inflation is going to give way here.
So she doesn't mention Zillow here by name, but Zillow just reported earnings on November 1st and announced that it was officially pulling the plug on its iBuying venture, reducing its workforce by about 25% and needs to offload about 7,000 homes. Well, here's a quote from a recent press release from Zillow's CEO. Our home price forecasting accuracy was far more volatile than we planned for, and was further exacerbated by unpredictable black swan type events. That's a fancy way of saying that Zillow's data on housing prices wasn't that good to begin with, and the pandemic certainly didn't do them any favors by causing housing prices to skyrocket. As a result of this, ARK Invest also cut their position in Opendoor, ticker symbol OPEN, by over 25%. I don't know if ARK Invest will sell out entirely of Zillow or just keep it as a lower weighted position, but I think this is a good example of the last kind of ARK Invest sale, a partial sale due to one specific part of an investment thesis not holding true, but not necessarily the whole thesis itself. Here's a quick and pretty funny story. I was actually very bullish on the concept of iBuying, and I do still think that some other companies can get it right. Earlier this year, when I still had my day job, I ran a second YouTube channel called Ticker Symbol Live, and I did a live stream working through Zillow and iBuying. As I was talking about it, everyone in my comments and in my live chat was talking about how bad Zillow's data was. That live stream really made me think twice about getting into Zillow stock, and then I never ended up circling back to it. So you, my awesome community, actually kept me out of this one. I think that's actually pretty cool. That's also why I think having a community of people to talk to about investing is so important. If you're interested in joining a community of like-minded investors that focus on tech stocks and disruptive innovation, you're welcome to check out my 4,000-member Discord community. It's absolutely free and has a channel for every area that ARK Invest focuses on, plus a few more that I found people were interested in discussing. It never hurts to have a second set of eyes on your investment ideas, and I often find myself learning something new in my community. I'll leave a link to that Discord community for you in the description below as well. Either way, I hope this episode helped you understand some of the different reasons that Cathie Wood could sell a stock. NVIDIA was a cash-like position. Pinterest is a company that they may not have analyzed too thoroughly simply because there are many other great opportunities out there. Peloton is one they did analyze thoroughly, but is facing some real headwinds from being an actual stay-at-home stock, as opposed to most of the other disruptive companies that ARK Invest focuses on. And somewhere between those two, there's Zillow, where only a part of the thesis isn't panning out, but that could be enough to change the whole investment story. Comment below or tweet me your thoughts on the different reasons that you sell a stock. Do you sometimes sell to free up some cash, or do you only ever sell when something fundamentally changes with that specific company or your own investment thesis in it? Do you think there are other reasons that ARK Invest could be selling a stock beyond the ones that I've covered in this episode? I'm excited to hear your thoughts. Thanks for watching, and until next time, this is Ticker Symbol U. My name is Alex, reminding you that the best investment you can make is in you.